This is an introduction on things that we need to know about car insurance. So there are a couple different types of car insurance, and we're going to look at some of these different types of insurance. Basically, it's coverage for your car, and it protects you against risks of financial loss. So you've got bodily injury is a type of insurance. So that's going to cover your liability if you injure somebody else. So if you're driving your car and you get into a car accident and the other person gets hurt and has to go to a hospital, your insurance will cover their bills. And you may also need insurance to cover medical payments. So medical payments will cover you. It will cover any passengers in your car and any family members driving in the insured vehicle at the time of the accident. So you or anyone related to you or your passengers in your car. So medical payments is going to cover you and anyone in your car, and then bodily injury is going to cover injury to others. You may also need your insurance to cover property damage. So property damage would cover the damage caused to other people's property. So that could be if you run into someone else's car and you put a dent in their car, or it could be if you drive your car into their house or into the street light or run over a fire hydrant. So other types of property that you have to pay damages on, you'll need property damage insurance. Collision insurance covers damage to your own car. So let's say you back into somebody and it damages your car but not theirs. So you might need collision insurance so that you can get things on your car fixed. Sometimes when you get into a car accident, the person who hits you with their car, they're what are called underinsured motorists. That means that they don't have insurance to cover anyone but themselves. And so they don't have any money to fix your car or to pay your medical bills. So you actually can pay into something called underinsured or uninsured motorists insurance. So that would protect you against damage to your car or injury to yourself or anyone in your car that's caused by a driver who doesn't have any insurance or who may not have enough insurance. And the other type is comprehensive damage. So comprehensive damage, that could be like something you were anticipating from, let's say, a car accident, but maybe lightning strikes your car or a bunch of balls of hail fall down and break your back windshield. Vandalism, any other types of damage that could be caused to your car, like fire, that's not as a result of negligence on the part of yourself or another person. So that would be comprehensive damage insurance. So if you drive a car in the state of California, the car itself, the owner of the car must carry minimum amounts of car insurance. So you as a driver don't carry insurance for yourself. As a driver, the car carries the insurance. And usually the owner of the car is the person who makes sure that they set up the insurance for the car. So the minimum car insurance you must carry by law, it may not offer all the protection you need. In other words, it may not cover fire damage to your car. It may not pay for the medical bills of the person that you hit. It may not even pay for the damage to the car that you hit. And sometimes people take on additional financial protection. So premiums, that's the price that you pay for automobile insurance. Premiums vary from state to state and also within states. Another thing about insurance premiums is that every insurance company sets its own rates. So if you go with State Farm versus Geico, they're going to set their own rates for car insurance. And they have to set those rates within state regulations, but they can vary widely from company to company, which is why it can be a really good idea to call a bunch of different carriers and see what rate they're willing to offer you. So premiums change. Sometimes premiums can be higher in large cities rather than the rural areas. Obviously, there are higher risks for car accidents or for cars hitting things or for being damaged in a city than there are in rural areas. And so the companies protect themselves by raising their rates. Another thing to know about premiums is that they're usually higher for drivers under 25 years of age than they are for those over 25. Statistically, drivers under 25 take more risks when they drive. They're less careful, they drive faster, they're more likely to be in a car accident or to cause damage to the car. And therefore, again, the insurance companies, they're going to raise their rates so that they're protected when they have extra claims, insurance claims coming in. And then, of course, drivers over 25, while not always great drivers, statistically tend to be safer drivers who are less risk to the insurance company. So some insurance companies bill semi-annually, so twice a year. And this allows them to change their rates more frequently and review the insured's driving record every 6 months. So if you have a really clean driving record and you've never had a speeding ticket or a moving violation, your insurance can be a lot lower. As you have problems with your driving record, if you start to have moving violations, that could be running red lights or speeding tickets, those go on your driving record, and the insurance company is going to check your driving record, and when they see that you're not as safe of a driver, they're going to raise your premiums. Again, they want to protect themselves just in case you're a person who's more risk to them. A lot of times if you have something on your driving record, like a speeding ticket, you can go to like traffic school and have it taken off your driving record to keep your premiums from going up. But that's not always the case, and it will depend again on which insurance carrier you use.